So we've had a couple clients bring up this notion about potential negative interest rates and that they're worried about it. And so I thought we'd clarify exactly what do negative interest rates mean and how to actually profit if the economy and monetary policy moves in that direction. So remember that negative interest rates really are stimulated by, need of enormous stimulus or, dire economic conditions. I don't know if we're quite there because of the fiscal policy and the amount of money that's gone into markets of late. But nonetheless, rather than speculate on that, let's say that interest rates were to go to negative territory. The only people that would impact is people that are buying into fixed income instruments or investments at that period, because you'd be locking in negative rates at that stage. But if you already have government bonds, fixed income, long-term U.S. treasuries that all of our clients would own to hedge against portfolio risk, if you already own these securities, that move to negative interest rates will have a massive positive effect on your portfolio. And so how would that happen? Let's say interest rates at 1% for long-term U.S. treasuries, and I'm not using exact figures, but let's say it's 1%, and we had rates move to negative. That would be more than 100% move in those bond prices, because it's worth 100% more than what your new bonds at negative rates would be. And that's what people fail to realize. You don't own bonds necessarily for the coupon, but rather for the protection that it provides. And that works at any level. A 2% move down to a 1% move suggests a 50% higher value for that bond than what you previously than what you would get in the marketplace at that stage. So don't be afraid of moving to negative interest rate environment. Just make sure that you actually have fixed income securities that will benefit from that, and you'll be protected. At that time, when we get negative interest rates, there are ways that we can pivot against it so that you're not stuck in this doldrum of low yield, but there are different ways that we can tackle that when the time comes. So just make sure that you understand what negative interest rates will do to your portfolio, because for most clients, it will actually provide a stimulus or a benefit, and especially on the fixed income basis.